Live, and guys, we're going to talk about chart reading today, and we're going to talk about it extensively because chart reading is where it's at. Whether you are looking at TradingView or whether you are looking at NinjaTrader, guys, chart reading is what defines your trades, is what defines what you're looking for, what you're doing. I'm going to do a couple different things this morning. So first, I'm going to say this is your path, and if you guys look in the chat box. Yesterday afternoon at 11:58 a.m., Mark B posted a picture in the room and he said, "Hey, Mark Novak, I have a question about strong tops and bottoms." To which I replied, one, two, three, four, five custom-made pictures to help him with this concept, to make him a better chart reader, to give him an edge, an advantage, so that he can move forward and see things more clearly. My promise to you is that if you post trades in this room, if you post questions in this room, if you have any concerns or needs, they will be answered. They will be taken care of. Guys, my job is to help you learn to read your indicators, and you help me do my job by letting me know where you need help. So each and every day we go through very simple rules. I say they're simple because there's not a lot of them. Whether it is TradingView, we're going to talk about a trend trade. There is a checklist handed to you, 3 rules. Those 3 rules create a trade that you'll be able to prove wins more than it loses. On NinjaTrader, same thing, the KISS plan. And guys, both of these plans are designed to optimize your chances of success as a brand new user. You will create your own plan based on your ability to read your indicators. So my job is to help develop this foundation so that you can learn to read your indicators, so that you can see more. And again, it's 3 rules that create a high probability trend trade. There's a little bonus rule in there too. Management, all the things that you need. Everything that you need to be successful with the software is provided to you in this room in the first hour. True story. It doesn't have to be difficult. Learn the simple rules first. Learn how to recognize what we call a high probability trade, guys. It's a trade where you'll be able to prove it wins more than it loses. It's a trade that you can develop confidence in, that you can trust, and you will learn to focus on the execution and let the execution, let the process yield the results rather than focusing on the results that you want without the execution. If you practice and post pictures in the room, I will give you feedback on every chart read that you have. Every trade that you take, guys, whether it is management, whether it is entry, whether it is general read, you will get feedback, and all you have to do is post in my room. The plan is simple. Your job will be to understand what looks you're committing to. And when you learn the looks become easy. When you learn the looks, the market slows down. When you learn the looks, you will pinpoint and predict your entry spot with pretty awesome accuracy. And everything that I do is really stemmed from what NextGen has been doing in the trading community for more than 20 years live. And it's teaching our users and new users and even old users coming back looking for that edge, a high probability trend trade. On NinjaTrader, it's a trade that you'll be able to prove typically wins 70 to 80% of the time. It's a trade that creates confidence through that memory of success. It's a trade that teaches you to read your indicators, and all it is defining a trend, and that's a really easy lesson. You'll have it in no time flat. You're going to learn to wait for a retracement, and a retracement is nothing more than a small push counter to the underlying trend. It's a fight, if you will. And then the hope is that when you pinpoint your amazing entry, that the market continues, and that resumption of trend is where profits are generated. So this is from 2004, 2005, NextGen trade number 1. There are still people in the traders chat room trading this pattern. So many people are latching on to SIVA. If you're over there, if you have access to that room, this is where he learned it. This is what he does still. All you guys that are amazed with him, he kept it simple. We're going to learn to do it on NinjaTrader as well. You will be able to find a trend. It's a very easy lesson. You will have no problem waiting for the fight once you trust the methodology. You will pinpoint right where the fight is most likely to be lost. This becomes your entry with the hope that resumption is the outcome. So we're going to learn to read our indicators to do this, guys. You're going to use a checklist that's provided in the plan. It has 3 rules, it uses 2 charts, and you're going to learn to recognize advantages, and you're going to turn those advantages into your trades. And what you're going to find, and this is true because we're going to spend the next 3 hours reading charts, you're going to find that about 90% of the typical day is chart reading, looking for these advantages, waiting patiently for these advantages. About 10% of your day is actively trading. You're going to understand through your chart reading a couple key concepts. You will understand, excuse me, where the market is likely to continue. And where the market is likely to continue is nothing more than your entry, where it's likely to continue with that trend that you've already defined. You'll understand where the market is likely to go using key areas, using momentum. And guys, you'll be able to enter a trade and confidently say this trade has a higher chance of going here than it doesn't. And you'll understand where the market is likely to stop. And we call these termination conditions. And a termination condition is nothing more than a key area on a big chart that could end a trend. You're going to learn how to not trade directly into them, and that's going to keep you in your 90%. To define the highest probability trend trade on NinjaTrader, it takes 3 rules. When a rule is true, what you've done is you've identified an advantage, and the recipe for a trade is momentum supplied by rule number 1 being true, a clear path, making sure that there are no termination conditions. When rule number 2 is true, you'll have room to make profits. And then finally, defining your entry. Now guys, there are 3 rules to take a high probability trend trade. The cool thing is, once you learn the first 2, once you can identify momentum and path, you have the keys to the kingdom, the golden goose, if you will. I think I just turned Teams back on. And you should see this in your head. Momentum means that the market's going to be hard to stop. Nobody's stepping in front of this guy. And with all that momentum, we're just going to make sure there's nothing in the way. And when those 2 advantages are in play, you'll be able to go define your perfect entry through rule number 3, where the market is most likely to continue. Now these 3 rules will happen on 2 charts. We start on a large chart. It's a big chart. It's a slow moving chart. It's a very broad stroke of a brush. Guys, this chart shows the overall opinion of the market. It shows you what the people in charge want to have happen. It takes 1 bar on a large chart using NextGen Dynamic Renko. You will be able to define the direction of the trend so that you can make good choices, taking trend trades in that direction. You will define the momentum of the market using the trigger lines to make sure that that advantage is in place. And you will understand if there are any areas in your way, areas that may stop the market, create big untradeable bounces. All of this happens in 1 bar. Your first 2 rules are met before you ever turn your attention to a small chart, a refinement chart. This is your entry chart. And it takes this very broad stroke of a brush, this 1 bar event. And in a successful trend trade, you will see the fight. That's that little push up when everything here says down. You will be able to pinpoint right where that fight is most likely to be lost. This is going to become your entry for the highest probability trend trade. You are literally predicting where that tail on a large chart is most likely to form. And then hopefully the market continues down. And all of this yellow box happens inside of 1 bar on the large chart. We use these 2 charts because there's this horrible reminder, or wonderful reminder, that we're not in charge, that our 2 lot, our 3 lot, our 4 lot, it has no bearing on what the market's going to do. I can't make the market go up. I can't make it go down. I can't make it react at areas. The large crowd does that. The men and women with the money to create a trend. The men and women that can establish that momentum that we're going to piggyback on, these are the same men and women that react right at key areas that you will know about long before the market gets to them. Large chart leads the way and the large crowd typically wins. Now your small chart, think of them as the small crowd. These are the ne'er-do-wellers. They create a fight. They create that retracement. They force the pullback. That small retracement counter to everything that the large chart wants. You're going to use rule number 3 to pinpoint right where their failure is most likely to occur. This is where the market is most likely to bounce and continue in the direction of all your large chart advantages. We rely on the small crowd to push down so that we can reduce risk, so that we can maximize profit potential. And this one pattern creates an edge. And everything that NextGen has taught for 20 years revolves around this idea created by Mark Douglas, taught by Mark Douglas, that an edge is nothing more than an indication of a higher probability of one thing happening over another, which means that when you stick to the plan, when you follow the execution, when you don't deviate, you can say to yourself, this is a trade that is more likely to win more than it loses. And the high probability trend trade tends to revolve and gives the potential to win right in that 70 to 80% range. But the hard, cold reality of trading is that every trade has an uncertain outcome. That's not at all what I wanted to see there. Hold on. Every trade has an uncertain outcome. So what does that mean for us as the day trader? Well, if I'm trading a pattern, if I'm following rules, and that pattern has been proven through back testing, through study, through simulation, through feedback to win typically 70 to 80% of the time, it's mandatory due to mathematics that that trade will lose 20 to 30% of the time. It's okay. It's not failure. It's not a negative. It's a cost of doing business. It's a normal part of a positive equity curve. So when you know that your trade has the potential to lose, but it has more potential to win, the focus is on execution. Execution of the method, making sure that you are following the rules, seeking the advantages, trading the pattern that you have proven wins more than it loses. NextGen has been in the software business for almost 30 years now. We just celebrated 28. You don't stay in this business for 28 years because you're doing stuff wrong, guys. NextGen indicators. We're going to start with areas. Areas are going to be horizontal lines on your chart. Each area does have a name. You're going to see divergence highs. When the market pushes up and momentum is lost and the opposing force takes over, you'll see that magenta line print right off of a pivot. Now that little white negative number, it's a byproduct of the calculation. Teach yourself to ignore it. It's the line that can create a bounce. When momentum is lost in a down move and the market pushes up, you'll see a cyan line. Ignore the negative number, but just understand that that line can create a bounce. You'll see Fibonacci resistance and Fibonacci support. And guys, this is what NextGen's been doing for almost 30 years. John Novak automated Fibonacci. And guys, when you open your software, it runs thousands of calculations over historical time frames, every Fibonacci retracement, extension, alternate, and it creates singular areas. Hey, good morning, Gator. Singular areas of resistance and support. You'll see yellow 1-to-1s. These are Fibonacci calculations, 100% Fibonacci alternates that print real time as you're watching the market. And then you'll see what we call the midband, and this is an EMA, exponential moving average. You don't need to know that. What you need to know is that this line could create a bounce, that any of these lines on a chart can create a bounce. When the market is moving up, any area reached, regardless of its name, may behave as an area of resistance, more likely to create a bounce down. When the market is moving down, any area reached is an area of support, more likely to create a bounce up. So areas tell us where the large chart's doing business, where the large crowd is doing business, where the small crowd is more likely to fail. And trigger lines show up in every rule and really give the most information. There are small triggers, just a fast moving average, 2 solid lines. There are large triggers. These will be dashed. So fast and slow, green is up, red is down. All you need to know is small and large, small and large. And guys, we're going to use these trigger lines to define momentum for rule number 1. And we're going to compare these trigger lines to those bouncy lines to make sure that we're not trading directly into a termination condition for rule number 2. And you're going to use these large triggers, that slow moving average, and this is going to help you pinpoint your perfect entries on that smaller, faster chart. Trigger lines and areas come together to show you a pattern that you'll be able to prove typically wins more than it loses. A pattern that only has 3 rules, 3 advantages, creating the highest probability trend trade NextGen has ever taught. And it all begins on the large chart with strong trigger lines. And strong trigger lines is a very simple look if you allow it to be. When the background is green and the market is in an uptrend behind that first bar, in order to have strong trigger lines, trigger line color must match the background. The same is true in a downtrend when it's red. Trigger line color must match the background along with one another. If your colors don't match, if your trigger lines are not the same color as one another, small and large, or if your trigger lines are red when the background is green and vice versa, rule number 1 is not met. You're in that 90%. Sit on your hands, wait for your advantage. But in an uptrend, if your small triggers are up and above the large triggers, if your large triggers are widening in the direction of that trend, it is the space created between the two. That gap that looks like scissors about to open, this gap lets me know that the odds are favorable for the market to continue up, and that is your visual for momentum. In a downtrend, it's no different. Smalls break below the large, large are wide. The space is there, the gap is present. And guys, when I have this look, the odds are favorable for the market to continue down. Strong triggers has nothing to do with these dynamic Renko bars. Strong triggers is not influenced by areas. It is simply one look. Separation is strength. And if the separation goes away, when the small triggers are inside of the large triggers, when there is no longer space, when your scissors have closed, this is what we call weakness, and this is the opposite of strength. And when I have weakness, anything can happen up or down. And with weakness, it's not uncommon to see reversals from the middle of nowhere. With weakness, it is not uncommon to see those key Fibonacci areas more likely to hold. So strength and weakness. Let it be very black and white. Don't convince yourself that there are degrees of strength or weakness. Simply learn the simple rule. Embrace the advantage of momentum. And when you have it, move on to make sure that there are no termination conditions, that your path is in fact clear. A termination condition, I want to show you the technical, and I apologize for not bringing this in earlier. Everything that I talk about can be found in the instructions. You can go back and reference it. You can go through, you can see it. You can click on TradingView to learn the indicators. You can click on NinjaTrader, learn the same trade we're talking about. There's even advanced things like market flow. And guys, if you want these indicators on your computer, if you're like, whoa, this is amazing, look at the accuracy, that Novak fella sure is charming, go sign up for the demo. There is no credit card needed. All you have to do is sign up. We'll give you a full working copy. You've got access to the plans, and yes, you do have access to me to make sure that you understand everything that you are studying. Now, when we go to termination conditions, a termination condition is a Fibonacci-based indicator that may reverse the market, and it's a comparison of the trigger lines and the area. All of those horizontal lines that may create a bounce can qualify as a termination condition. When there are no termination conditions, there is room to profit targets, and when there is room to profit targets, we're just going to call it a clear path. Now, when NextGen develops a plan, we take tens of thousands of pictures and thousands of man-hours going through and studying, and what has been determined is that when a termination condition is in your way, when the rules are met to define that area as an area that could stop the market, you are more likely to lose a trade taken into it than you are to win, which means that your edge is gone. Your advantage is no longer in play. So learn to define a termination condition so that you can understand when not to trade. It's a very important skill. And it's really not a difficult thing. These dynamic Renko bars, price, If price reaches an area of resistance, or in a downtrend, if price reaches an area of support, once it gets there, price arrives, we're done with price. No more. Don't need it, doesn't matter. Trigger lines will tell the story. If no trigger lines, 0, not 1, makes it through resistance, resistance is a termination condition. Resistance is an area that is going to do one of 3 things. The area may break, price reaches, no triggers, I don't know what's going to happen, and ultimately it breaks. Price reaches, no triggers, and look at the reversal. Price reaches, no triggers, once again a reversal. And in a live market, it's going to look just like this. Price reaches that area. I turn my attention to the trigger lines to tell me what the most likely outcome is. And as long as no triggers have made it through that area yet, I choose to wait for the reaction. Is it going to break? I don't know. Is it going to reverse? I have no idea. Is it going to set off a fight between the buyers and sellers that I don't want to be a part of? It's a probability, but I'm not sure. So no triggers, no trade, guys. This is your safety net. If it's going to reverse, you'll see the large triggers roll down. Everything will change colors. Pretty easy. If it's going to fight, very often you'll see that the small and large just won't match one another. It becomes a difficult fight, the buyers and sellers duking it out. If it's going to break, trigger lines, not price, will tell the story. And if you can count to 4, you've got this great lesson. Price reaches, no triggers, no trade. I'm encouraging everyone in this room to learn that lesson. Now, I'm going to wait for the reaction. If it's going to break, the trigger lines will tell the story. Price has nothing to do with it anymore. The color of the area has nothing to do with it anymore. If both of the small triggers get above the area in question, as long as momentum is in play, rule 1, that area does have the potential to break. It's not the best look. It's not the highest probability. This look does not optimize your chances of success. As you grow with the software and learn to read your indicators more effectively, you will find opportunity for trend trade with this. You will find opportunity for momentum trade with this. But for the brand new user, we are avoiding trading with only 2 triggers through. That's what the plan says. If 3 of the 4 triggers get above that area of resistance, now the potential to break is a little bit higher. Now the potential break is a better look. The yellow number 3 is reminding you that if you choose to take the medium probability trend trade, which happens to be the second trade on the plan that I've handed you, you may want to manage it assertively because the area is not broken yet. You're trading potential, not a clear path. And a clear path is created by 4 triggers breaking above the line. And when the path is clear, the path remains clear right until the next line is reached, right until price reached the next line. But with this look, strong triggers, clear path, you're going to head over to your smaller, faster chart and you're going to pinpoint where those tails are most likely to form using rule number 3, and this will be the easiest trade that you ever take with the software. It's just a pattern. When the market is down, when the momentum is strong, when the path is clear, let's wait for the fight and pinpoint where it's most likely to fail, hoping to take that trade down to the next key area. Now let's open up a large chart, and crude oil is absolutely grinding right now to the downside. But I want you to see something. Support breaks. They come back and test it as resistance. There's one of your lessons. If we just widen it up and back it up a little bit, support breaks again. They come back and test it as resistance. Weak triggers, reversal from the middle of nowhere. Resistance breaks, resistance breaks, resistance breaks. They come back and test it as support. No, where are we at? Price reaches support, none of the triggers break, big bounce up. Price reaches resistance, price reaches support. Triggers don't break both. Say hello to consolidation you don't have to get caught up in. Price reaches, no triggers, no trade, giant untradeable bounce. Do you guys see it? The accuracy of Fibonacci is freaking unreal. I'm just going to say it. Call it what it is. Price reaches with all the momentum in the world. And that was the bottom that set the market off in the direction. Price reaches resistance. The triggers don't break. They're weak. There's your giant push down. And guys, that was the end of a move that started from support with no triggers through it. You will understand where the market is likely to go. You will understand where the market is likely to stop. And guys, now we're going to go define right where the market is most likely to continue, where that small crowd fight is most likely to be lost, so that we can define that point, get our entry area advantage in play so that we can piece the three together and create a trade. And again, language. I'm a language nerd. I'm going to tell you right now. Rule number 3 says that you will use a limit order, that your entry is so predictive, so precise, that you will wait for the market to come to you. Now you're going to buy or sell a pullback. That's that fight created by the small crowd. That's that small retracement counter to the underlying trend. And you're going to buy or sell that pullback at an area, at Fibonacci, at a mid-band, at a yellow 1-to-1, because areas create bounces, and our hope, our wish, our want is that the area creates a bounce back into the direction of your large chart advantages. But that area, and this is where the awesome comes in, that area will be inside of those large triggers, because that's going to define right where they need to be. And guys, it is just a pattern. And if you learn the verbiage, I love the word verbiage. Rule number 1, separation is strength. And when that separation is present, I have the advantage of momentum. Rule number 2, price reaches, no triggers, no trade. I can define my clear path by counting triggers at a line. And rule number 3, I will use a limit order to buy or sell a pullback at an area inside of triggers. So when the large chart advantages are in play, this is your entry sequence, guys. This is what's going to happen every high probability trend trade to the short side. Momentum is present, and there is room to trouble. This is the key. This is the core. This is the foundation. Step 1, wait for a reversal bar on the small chart to signal the pullback. The reversal bar is not your entry. This is the beginning of the fight. Now, if this begins the pullback, I need to know where the pullback's most likely to pull back to. That's your large triggers. Your large triggers will define the retracement zone. Your large triggers will tell you where those up bars are most likely to continue up. But triggers aren't bouncy. The rules are very specific. I will sell a pullback at an area inside of large triggers. Now, for a short trade, we're selling resistance, because resistance is likely to create a bounce down. There is red Fibonacci, magenta mid-bands, yellow 1-to-1s. This is your list. Learn it. Your window of opportunity, the point where the market is most likely to bounce and continue in the direction of the large chart advantages, extends from the lowest point of resistance, happens to be a fib behind those triggers, to the highest point of resistance, which is a mid-band. This is where the market is most likely to bounce, where the market is most likely to continue in the direction of the large chart advantages. Now, remember from earlier today where we said the large chart is just screaming to the south side with absolutely nothing in the way. Guys, it's going to be hard for the small crowd to push too high. So your entry is a tick or two below the lowest point of resistance. And now you've done all you can do. And if the small crowd fights, if the retracement does in fact get back to your limit order, you are short. You're in a short position with odds favorable momentum, which lets you know that this is the market that's going to be very difficult to stop. You are short with absolutely no termination conditions, nothing on that higher time frame that may create a bounce. You are short from an area inside of those triggers where the market is most likely to continue. And guys, this entry is your highest probability trend trade ever. And I'm going to show you something even cooler. This is your NinjaTrader plan. When you can define your entry, you have already started management. Because by defining where the market is most likely to continue, what you have done is you have also defined where the market should not go. If my entry is 2 ticks, this is from the plan. If my entry is 2 ticks below resistance inside of triggers, my initial stop will be 4 to 5 ticks beyond the triggers. Because if the small crowd can push through the areas and blow through the retracement zone, this probably isn't part of my 70 to 80%. I'm going to minimize losses by pinpointing where the market is most likely to continue. This particular trade has $150 per contract. It is a 2-contract scenario on the management plan provided for the new user. Now, they may hit my stop. That's cool. They're going to have to come get it though. I'm not going to leave my stop in the retracement zone. I would never leave my stop below the area inside of triggers because my stop is more likely to get hit only to watch the market fall. So accept the risk. You'll know where it is before the market ever enters. Target are predefined, $100 and $200. You are learning how to get paid. You are learning to accept what the market gives rather than demanding what you want. You will either get stopped out or the market will produce a reversal bar in the direction of your trade, letting you know that the small crowd failed, that the large crowd has taken back over. Your new stop will be 2 ticks above the reversal bar in the direction of your trade. This is where the market should not go, because if the buyers fight again, they're probably going to take it out and go higher. Guys, you went from $150 per contract to $30 per contract. Not a lot of risk. If they come back and get you, it just doesn't sting that much. But with the rules met, with the pattern true, they're more likely to get to your first target. Only $100 in the distance. 10 ticks on crude oil, 8 ticks on the S&P. And if price reaches your first target, 1 contract is automatically removed. Those funds go into your account. And with 1 contract remaining active, you're going to move your stop to break even if you're following this plan. Moving it to break even does not say where the market should not go. Your stop is literally below an area of resistance inside of triggers. But that break even stop creates courage. It creates courage to believe that when the large chart has momentum, when the large chart has a clear path, that market is more likely to go to your second target than it is to come crank and get you at that first break even stop. And guys, if it does, it's a $300 trade. That's $75,000 a year. 1 trade, 3 rules, 2 charts, 1 pattern, repeatable, testable, provable, trustable. Dun, 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 I just lost my PowerPoint. That's okay. So guys, that's NinjaTrader. Your most current bar, smalls above the large, large or wide, space between, rule number 1 is met. 2 triggers are above resistance, 2 triggers are below. That's not my best look. It just turned into 3 triggers. That's a much better look. If I were going to take a medium probability trend trade, well, first I would want it to come from a termination, but it hasn't. But I want you to see how predictive the methodology is. If I know that the market is most likely to bounce from an area inside of triggers, if this medium probability look is to be successful, that's where it's most likely to happen. That's where the market is most likely to pull back. That's where it's most likely to bounce in the direction of the trend. My limit order will wait a tick or 2 above that highest point of support, and I'll say something clever like, come get me. I know exactly where the market is most likely to continue. I know exactly where the market shouldn't go. Now guys, this particular trade is medium probability. And rule number 1 for a medium probability trade is that the market comes from a strong top or bottom, a termination condition that reverses the market. If it reverses from the middle of nowhere, mid-band's more likely to hold. Of course, this is the open of the market, and they don't care about my rules. Pretty cool, right? All the momentum, I still have room to Fibonacci, and I have 1 line left inside of those triggers. And guys, this is one of the cool things. If it hits and bounces, my risk is about 8 ticks, 4 or 5 ticks below the trigger lines. If they come get me, I have 18 ticks to get to resistance. The small crowd is fighting. I've got one line where the market is most likely to bounce, and I've got very clear targets above me should the market give me an entry. Does that make sense, everybody? Welcome to NextGen. This is your high probability trend trade, and the only thing that I don't control is whether or not it wins. I have absolutely no influence on that. I know where the market is likely to continue. I know where it's likely to go. I can see where it's likely to stop. All I need to do now is follow my plan, insist on the execution, and really hope that probabilities work out in my favor, because I never know what the trade's going to do. That's it. That's what it looks like in a live market, guys. That is your high probability trend trade. Now, TradingView will go through the exact same thing. TradingView is not NinjaTrader. They are similar in methodology. We're going to talk about defining a trend, waiting for a fight, hoping that the trend resumes. Guys, that is the exact same methodology that was taught 20 years ago, and now we're going to do it on a chart that uses minute bars instead of dynamic Renko. The goal is still to learn to read your charts, to recognize advantages, to use 2 charts and 3 rules, and to learn to be patient, because patience is a virtue. Your 2 charts, oops, you know what, just for grins, we're in a long trade. First target at 100, second target at 200, bottom of the triggers at 79, 74 is where the market should not go if this is going to be one of those winners. Your 15-minute chart will define direction, will define momentum, will define key targets, will define terminations. Large chart, large crowd leads the way. Your 1-minute chart, guys, this is going to define the immediate strength of the market. These small triggers are the immediate strength of the market. You're going to learn how to not fight them. You will pinpoint your entry. 2 charts. Your large chart only has small triggers. Guys, I have eliminated anything that doesn't help you. I have eliminated things that distract you. Small triggers is all you need. It's too slow, 15 minutes. Small triggers, no large triggers, no background colors. Now on your small chart, you will have small and large triggers. The small triggers are the immediate strength indicator. This is all you need for a high probability trend trade. The large triggers will come into play later in life, and those large triggers will let you know when momentum is strong, separation is strength. They'll be used for a momentum style trade and also for what we call a high volume area trade, helping you pinpoint tops and bottoms. Both charts will have one-to-ones. Both charts will have divergence highs and lows. Both charts will have a mid band, even outer bands, points of exhaustion. And all you need to know about areas, guys, it doesn't change from one platform to the other. Areas can create a bounce. Areas can stop forward progress. Areas can upset your amazing trade. So when we look at the 3 rules for the high probability trend trade, 2 of the rules, the first 2 rules remind you, don't trade into areas. Don't trade directly into areas. That's the first 2 rules. They're the exact same rule on 2 different time frames. Your third rule will pinpoint with pretty awesome accuracy where the market is most likely to continue. Excuse me. This is where entries come from. You will need to know where your entry comes from to be able to really take advantage of not trading into areas. So define the trend. What is the trend? The trend is the small triggers on the large chart, either up or down. That's it. If they are going up, your rules say you are looking for rules to be met for high probability trend trades long, because trading with the trend is your friend. If the triggers are down, you're looking for short trades. Rules to be met for short, this is what the plan says. Guys, if the triggers are flat, if they're lifeless, if they're hard to tell if they're going to go up or down, maybe they're transitioning from up to down. Guys, if you have difficulty deciding whether the triggers are up or down, it's okay to sit on your hands. That's a giant red flag. Any trades you take is really a guess, and it's hard to take a trend trade if you can't define the trend. Once you define the trend, you're going to look at your large chart and you're going to say, all right, I'm not going to trade directly into something that could create a bounce. Now, guys, the market just opened. There's a huge bar. So my triggers are up. My trend is up. The market is moving up. But the market is currently at an area that could create a bounce, an area that could cause push down. Now, opening bar, who knows how big it's going to be, but it really is that in the moment. My trend is up. I'm right at trouble. So I either have room to targets, which we don't have currently, or I'm already there, and this looks just like what's happening. If I'm already there, I sit on my hands and I just say, you know what? I'm going to wait a minute. I'm going to make sure that from wherever I take my entry, I have room. The same is true on the 1 minute. Make sure that the 1 minute is not trading directly into something that could create a bounce. And we're going to go pinpoint our entries so we know if we have room. For a long trade, the large chart says up. The large chart has room to trouble. Now we need to wait for the fight because we're going to buy a pullback to an area with a close on the weak side of the triggers. So when everything says up, when the buyers are in control, when my fear of missing out is going full tilt boogie, my small triggers, my immediate strength indicator rolling down, this signals the beginning of the fight. It's not your entry. The fight must be taken to an area because areas produce bounces typically. So when the fight begins, the market must pull back to an area. Now guys, we talked about these triggers being the immediate strength of the market. As long as I am left of those triggers, the immediate strength is against me. That is the strong side of the triggers. When price closes, finishes, a bar is done on the right side of the triggers. This is the weak side of the triggers. This is where entries come from. This is where the market, right at the bouncy thing, is more likely to continue in the direction of the large chart advantages. For a short trade, the sellers are in control. The market's pushing down. The small triggers roll up. The fight is on. And because the fight is on, I look higher. I look for an area. I'm looking for an area of resistance for the market to bounce down from. And when the market gets there, my entry is a close below the small triggers on the weak side of the small triggers, where reversals to get back in line with the large chart are most likely to happen. Guys, getting in on the correct side of the triggers is the bacon saver. And when you try to anticipate, not uncommon to get run over. When you don't wait for an area, not uncommon to get run over. Pulling back to an area with a close below creates the edge, the advantage. And from wherever the close occurs, you need to make sure you have room to your next target, that there's room to make money. Everybody has a different idea of how much room is enough room. For the brand new user without those ninja reflexes, couple $100 distance isn't a bad way to start. I don't tell you guys what to do, nor do I give trading advice. But giving yourself room to react, and the fewer obstacles you have in the way, the less likely there is to be that craziness. Now here's one thing that happens. I'm going to share this with you guys because I like to share. Is there will be times where you patiently wait for the pullback to an area. And there will be times when the market looks like it's going to close above. And then for whatever reason, every buyer and their grandma pumps the market full. And that bar is a 500-point bar that finishes right in front of the line. Even though your area is way down here, and you wanted the close to be way down here, guys, if that bar is a giant bar, it may not have room. It's okay to skip that trade. But when you define the trend, you have the edge, the advantage of trading in the direction of the people who control the market. When the market's not trading into areas, you are willfully avoiding the things that could create a bounce against your trade. And when you buy or sell a pullback at the 1 minute area with a close on the weak side of triggers, you are knowingly entering from an area that could create a bounce in the direction of your trade. And you will call your shots, and the market will slow down, and you will have patience. So when the triggers are down on the large chart, and we did this together live in the room months ago, the triggers were down, and the rules say only short trades. And from where the market was currently trading, there was plenty of room to get to that green line. Room to trouble true. Let's go to the small chart and find an entry. Well, the market was doing this, and everybody in the room's like, damn it, we missed it. And then the small triggers roll up. The immediate strength indicator goes against the large chart. The fight is on. And because the fight is on, hey, good morning, Anthony. Because the fight is on, we drew a box around areas that could stop the market, areas that could create a bounce, areas that needed to be used in order to follow the rules for the highest probability trend trade ever. And we waited 9 minutes for the market to pull back to an area and close on the weak side of the triggers. For 9 minutes, there was nothing to do but wait for the rules to be met. There's a lot of patience in this methodology. When the market closes below the small triggers from the area after the pullback, it was less than 2 minutes. It was almost a 30-point drop instantaneously. These areas are respected. The market creates them. And guys, that's your entry. You will call your shots. Now we go back to the idea that for a short trade, we want to get in line with the sellers on the large chart. The only way we get a pullback is if the buyers fight. You will pinpoint and see exactly where their fight has been lost. It's the high tick. It's the pivot high. That's where the buyers could do no more, where the sellers took back over. Your initial stop will go on the other side of those triggers, or on the other side of that pivot, above it, above where the buyers fail. Because if they come and fight again, they're likely to take out that pivot. There's no reason to have an enormous amount of risk on the trade. Same is true. Market comes down, hits an area, closes above. Your stop goes below the pivot low where the sellers failed to provide you that long trade, because if the sellers fight again, they're likely to take out that pivot. Areas of resistance are where short trades originate. So when the market is moving up and reaches an area, that area is most likely to create a bounce down. Had trouble in paradise, Carl? We'll take a look. Areas reached in a downtrend are areas of support, most likely to create a bounce up. Guys, this is where long trades originate. Now here is the most brilliant picture for you TradingView users. Price reaches one-to-ones, and the one-to-ones don't break, or the one-to-ones don't bounce, strong side of the triggers. Mid-band support, strong side of the triggers. Divergence low, one-to-one, strong side of the triggers. Support, strong side of the triggers. Support, weak side of the triggers. And the market starts up. This is your entry methodology in a nutshell. And why your rules tell you, wait for the close on the weak side of the triggers. Now, if short trades come from resistance and long trades come from support, it's imperative that you know how your areas are behaving. When the market is moving up, any area reached is that area of resistance. If the market produces a full body, 4 corners of a bar that closes above the area behaving as resistance, that area switches roles. It turns into support. And when it turns into support, it's now more likely to create a bounce up. So short trades are suddenly off the table from that area. If an area of support gets a full bar, 4 corners, closes below, it turns into an area of resistance. It's no longer viable for a long trade. The area is no longer likely to create the bounce up. Knowing the difference between support and resistance is going to keep you from taking trades from the wrong sides of things. And guys, the market was up, and that same area that didn't provide us any room is the area that's creating the bounce down. Pretty cool, right? And now as the market pulls back to an area of support. My triggers are up. I've got room to retest the area. If I got a close on the correct side of the triggers, I can already see the thing that could create a bounce. I know exactly where my trade has to come from. I know exactly what has to happen. But guys, if we're being completely honest with one another, that area stopped the market. The reaction off of it is huge, strong triggers. That could be a top. But I've got 48 seconds to decide whether or not I want to take that trade with a close on the correct side of the small triggers. I've got 40 seconds before the bar will ever finish. And the market's going to tell me whether or not they want to respect that area. It's currently an area of support. If they continue to push down, if a full bar closes below those one-to-ones, guys, one-to-ones become resistance. This area is no longer on the table for long trades. In 20 seconds, 18-17, if this market closes somewhere in the 405 area, I've got about 20 points to get back up to retest that area, to try to take a long trade in the direction of the trend. And I've still, whoop, there we go. The bar finished. No close above. No trade. And guys, look at them. They're still pushing down. Strong side of the triggers. Does that make sense? That's what it's going to look like live. There simply is no trade. No loss, which is kind of nice. Our trade up here didn't work. Happens sometimes. That's okay. So guys, that's my first hour. That is, and we made it 9:49. And now when we get through that first hour, we see what Carl's doing. And Carl says, check it out. Bad trade all around. Any help insight? Let's see. Small triggers are down. Price was on the weak side of the triggers. The market pulls back to resistance, right, Carl? Now from 77.19 to 77.1850, not a lot of room. Can we agree? Those one-to-ones are behaving as support. You traded directly into support. Carl, give me a yes if that makes sense. You had 4 ticks, 3 ticks to the area that was behaving as support. Rule number 2 is not met. Now, it's not a bad looking trade. You could have moved your stop down behind the buyers trying and failing again. You could have moved your stop again when they pulled back and pushed down. You could have been a tick deep into this trade. Does that make sense, Carl? So let's look at what happened here. And this is for everybody. And guys, this is the great thing when people post. Sellers are in control. The most important thing I want you to know. Sellers are in control. Buyers fight. Sellers take over. There's your first stop, right? Above the pivot that gets me in. So what happens as the trade materializes? The buyers try again, and the sellers say no. I'm going to reduce my risk because if they try again, they may take out that pivot. Carl, they did it again for you. Sellers or buyers fought again. Sellers said no. And just by using pivots, you've reduced your risk on the trade. You've got no risk on the trade. If it runs, outstanding. If it doesn't, who cares? You can't lose. Does that make sense? Guys, great entries create manageable trades. Great entries make it easier to have less risk. Understanding the very basic patterns gives you an opportunity to lock in, to take advantage of those entries and not give it all back. So let's see what we have here. Triggers are up. From where you're trading, perfect, right? Market pulls back, reaches an area, close above. 2 bars later, it hit the stop. It had already been there. And guys, this is one of the things. So when I teach in the room, I talk about the perfect entry for the trend trade, right? I talk about the idea that great entries create manageable trades, that this very basic entry teaches you to learn and recognize what's happening on your chart. So Carl, what do you see has already happened twice before your trade? And now we're going a little more advanced. Market reached a term 2 times, and 2 times it rejected. That's it. That's it. It's already been there. It's already been there twice. Well, hell, it's already been there 3 times. It did it earlier too. Now that doesn't change that the trend is up, and it doesn't change that there is room back, and it's hard to read your prices there. 53, so there's plenty of room to get back. Your target makes sense, right? It hits it and pushes down, and when they test it again, it ultimately produces really strong triggers against you. Everything about your entry is 100% perfect. And honestly, they started changing direction. I like it. It just didn't work out. I like to keep my eyes on where it's been. And this is kind of a getting there. Something that you'll see later in life. So if it's already been there, if it's moving up, man, I'm not even going to say reduce risk. I think you did everything perfect on this trade, Carl. It just didn't work. You followed the rules. You followed the plan. You took the right entry. Your stop was in the right spot. And when I say things like, hey, notice that it's already been there, you'll see on TradingView, well, I mean, there it is right there, right? Same thing. And it never gave the entry, never got 2 corners above. But this is one of the things that happens. So if it's already been there, if it's already been to that thing that could stop the market, what does the reaction on the small chart tell you about it? Do you see the momentum? Overwhelming to the downside. The sellers love that area, and they really picked up speed coming off of it. Now, if you were going to take the trade, right, I don't have an area to take the trade from, you could even let the small triggers get back above the large triggers. You could let them change direction. You could force your small chart to slow down a little bit before you committed to a trade on the large. And Carl, this is going a little advanced, right? This is kind of next level. But you'll get there. So the triggers are up, and they reach the termination, but what else do you notice here? They reached a termination as well. So I've got 29,425. I've got 29,329. I mean, that's a pretty big gap. Large triggers are still up. That was your first close above the small triggers. There just wasn't any room. There just wasn't any room to take a trade. There wasn't an area to come from. But look at the reaction. It took it all the way back to the thing that could stop the market, and it didn't bounce until it got there. That is a very definitive, like, declaring war by the sellers from the key area. Does that make sense, Carl? And you took the trade perfect. Both of those, you took the trades perfect. Sometimes trades don't work out, and that's the cold, hard reality of trading, right? Is that every trade won't be a winner, that every trade isn't guaranteed to go the distance, that every trade isn't going to be the one that pays your bills. But if you're following the pattern, you can say, I might get my bills paid more often than I don't. Let me get rid of that one. And let's load up our Pro Matrix. So guys, the second half of my room, the next 2 hours, is really dedicated to 2 things. On a minor scale, it's dedicated to the matrix systems. It's dedicated to the automated trade systems that take NextGen's 20 years worth of education and has automated the entries, which is pretty awesome. I'm going to load this up. And then the bigger part, the more important part, I think, the part that is going to take you next level is we're going to read the large chart. we're going to read the tops and bottoms, we're going to read the momentum, we're going to read the termination conditions, and we're going to begin to recognize patterns outside of the very basic patterns that create an advantage or take the advantage away. For example, if price reaches a midband and the large triggers are a full bar away, that's a termination condition. This is what we call the gap theory, and the market is more likely to close the gap. If the market is coming from a weak bottom, not a termination condition, the midband is more likely to create trouble. The market has a tendency to want to continue to the next key area. There's two of them right there. Never guaranteed, right? All the momentum, well, that was the weak bottom, and then it holds and it continues down. There's the weak top, hits the midband, large triggers don't follow, gap theory 100%, and then they make decisions, and sure enough, the decision is to push it down. Terminations are still termination conditions, guys. Gap theory is always the gap theory. So we're going to spend a big part, there's your gap theory live. Price reaches a midband, yellow 1-to-1s, large triggers are below the reversal bar marker. Not uncommon, unusual, or out of sorts to see the market come back and close that gap. Never a guarantee. So we're going to talk about these things today, but one of the things that I want to do, and I want to address, where is it? Before we get into it, guys. And I built this little PowerPoint because there was a challenge. Weak bottom, midband area is problematic. There was a challenge with people testing their systems, going back on market replay and letting it run at 1,000 times speed and hoping that because automated was in the name of the system, it would just start printing money for them. Guys, the one thing that's so important to remember, and I'm recording today too, so I'm going to make sure this gets recorded loud and clear. Automated futures day trading systems by NextGen Software Services are not set and forget tools. While the strategy will handle 100% of the entries and exits, all users must continuously monitor positions and system activity. Market conditions can change rapidly. During periods of extreme volatility, news events, sharp trends, it can lead an automated strategy to behave in ways that require immediate user intervention. Failure to monitor the system may result in significant losses. I'm going to show you an awesome example of that. By using the automated strategies, you are solely responsible for managing your risk, ensuring proper system function, or pausing or overriding the strategy if markets become excessively volatile or behave outside of normal expectations, or even more brilliantly, if your awesome chart reading allows you to see things that could create a problem with the trade that your system is seeking. Hands off. The biggest pain in my butt, two words that I've heard in the last few months, hands off. The system will handle 100% of the entries and exits. Hands off does not mean that you don't have to manage your trades or that you leave the system running unattended, because the first thing that was said at the beginning and the launch of the first automated system was that it's not set and forget. Your system is a program. The system will only do what you ask it to do under the conditions you tell it to follow. This grid is a visual of what you've asked the system to do and when you've asked it not to do anything. So you'll see entries, whatever entries you choose, it'll let you know if the rules were met. These are the only trades the system is looking for. You can tell it how to read the higher time frame trigger lines. And guys, there's three options on the trigger lines. You can ask it to only follow the small triggers. Whatever color they are is the direction you're trading. You could ask it to make sure that both trigger lines are going the same direction, or you could ask it to insist on odds favorable momentum. That's up to you. I have mine only trading the direction of the small triggers. I have put in higher time frame termination conditions that I want it to respect, recognize, and not trade into. I've done the same thing on the small chart. The system will only do what I ask it to do. And if you're looking for a good baseline, feel free to use the one that was provided by us in the room. The first one, the first template was designed to let you guys see the system enter, which means that there were no large large chart terminations, which means that when people first got the Pro Matrix and they started testing it at 1,000 times speed on playback, your system didn't recognize one termination condition as taught in this room each and every day, which means that it lost about 3 grand over the course of 2 hours taking the perfect trades, and the system never knew that these problems existed. Some of you like to run it loose. Some of you like to not have it looking for these areas, and you're like, I'll just take care of it myself. That's cool. If the system's not looking for terms on the big chart, guys, you probably should be. And if you see them, exercise your right to be in control. Just because it's an automated system doesn't mean the rules don't apply. I encourage each and every user to learn what it looks like when the rules are true for your trade and a setup is coming. Because if you take the time to learn this, if you are 5, 6, 7 bars ahead, okay, this is where my trade has to come from, this is what has to happen, my rules are true, it's looking for a short, you are already thinking about management. You are already scanning your chart for problems. You are already saying clever stuff like that line could create a bounce. Because your system, again, is just a program. And part of the trade management side of it is you tell it how many contracts to trade. You tell it where your stop loss is going to be. It's predetermined. It has nothing to do with market patterns. You tell it when to go break even. It's just a number. It has nothing to do with areas that have already been hit. You tell it how many contracts to pull off for the first target, and that target is just a number in a box. It has no bearing on any market condition. It's just a predetermined arbitrary number, the same for the second contract as well. Do your numbers make sense for the trade that you're taking? And now this is where the human element produces results. If you enter, and guys, this was a strong trigger trade. This is the perfect trade. Every rule met, everything that I look for in a trade, and asked the system to take for me, and it did. It put me in the market. My system said, Mark says that the first target's at 60 ticks. That's where we're going to put it. Mark said, I see these yellow 1-to-1s. These yellow 1-to-1s could create a bounce. These yellow 1-to-1s could stop a trend. These yellow 1-to-1s could upset everything I hold dear in my heart. I'm going to move my target. I'm going to override my system 60 ticks target. I'm going to reduce that number and place it just above the area that could create a bounce. My system isn't going break even until that 60 ticks. If my first target is reached, I'm exercising my right to go break even into an area that could stop the market. I'm taking control of my amazing entries. If I know that a trade potential is there, and I know that there's areas off in the distance, I am prepared to manage that trade at said area. And guys, if it hits a fib, and it bounces, and it creates a full loss, and this is happening on market replay, your results suck. So a little human intervention turns these losers into winners. A little management on your side creates pretty cool stuff. Now, one of the things about the system is a one chart endeavor. The system has the rules, the system has the blocks, the system has everything that it needs, and it creates a higher time frame. Look at that, trend trade. Pew! We were disabled, we didn't get it. The system only does what it's told, and it does it on its own. It doesn't look at a higher time frame. If you build a higher time frame, it's for your eyes. Guys, this is where the awesomeness of this room comes in, because we're going to use that higher time frame. And we're going to talk about things like weak tops. And we're going to talk about things about momentum. And we're going to talk about weak bottoms and how the mid-band may be problematic, and how if the large triggers don't follow, price is very often going to pull back to those large triggers. This is what we call the gap theory. You'll see it at least 10 times today. There it is. If my system is only looking at the small triggers to initiate a trade, does it make sense to go long if the gap theory is in play? Does it make sense to take a long trade when price is more likely to suck down below my entry and hit those large triggers? I hope the answer is a resounding no, and you choose to not accept that trend trade. Now, you could put the mid band as a block, but guys, if we're being 100% honest with one another, and you'll see it a lot today, there's a lot of instances where that mid band is more likely to break than create a problem. But if I see the gap theory, I may choose not to take that perfectly executed trend trade. We're going to talk about strong tops and bottoms. Mark B, are you in here? Are you ready? I built a whole catalog for you this morning, brother. If it's a weak bottom and the mid-band is reached, the mid-band is likely to create challenges. You may choose not to take the perfect trend trade into a mid-band that may create challenges. You may choose to just manage the heck out of it. So guys, understanding the large chart reads is going to set you up and make it easier for you to do great things on the small chart when the system is looking for the entry you asked it to look for. But you are always in control. There is nobody behind you. There's no obligation to leave it running. You can disable it if you don't like what you see. You can ignore your filters if you love what you see. And guys, everything comes back to patterns. Well, Siska, there's no access yet, but when I am done and the recording is done and life is good and everyone's smiling, eating their lunch, you can always come back to our stream section on the YouTube. Under live, it'll replace this one as the first one. But these live recordings are my classroom for years, honestly. And what you'll find is I say the same thing every day. I talk about the same advantages every day. I talk about the same patterns every day. And you can come, what a great segue. You can come to my 101 room at 9 a.m. and you can learn these patterns and you can learn these concepts and you can see them. And that's what we're going to do for the second half of the day, guys, is we're going to open up a large chart. And we're going to say things like, oh my gosh, price reach pink 1-to-1s. None of the triggers broke. That's a termination condition. That's an area that could stop the market, that could create a bounce. And I'll be good gosh darned, that's exactly what it did. The same way it did here. Pretty cool, right? You know about these areas before the market gets there. You know about them. You see them. You can learn to respect them. Guys, I'm going to show you the magic of this room. Mark B says, how the hell do I determine a strong top or a strong bottom? How do I know? What kind of top is number 1? What kind of top is number 2? What kind of top is number 3? Guys, if you ask me questions, I will give you answers. That is my promise to you. NextGen has been teaching live in rooms for the better part of 20 years. And guys, I love the sound of my own voice, and I've got low self-esteem, so I absolutely love to appear smart. So let's define a strong top or bottom, because this is going to pay dividends for you guys choosing to trade into mid bands. This is going to pay dividends for you guys who want to ignore filters and maybe trade into a fib because of what's happening on your chart. So first, defining a strong top or bottom. Number 1 has to happen absolutely. No negotiation for the 101 version of this. Price reaches an area. Absolutely no triggers break through that area. This is a termination condition. Mark B, give me a Y if that makes sense. Price reaches an area. Absolutely no triggers break through. Does it really happen? Yeah. Price reaches an area. Absolutely no triggers break through. That's where it all begins, my friends. But that's not the end of it. The large triggers must pinch, must roll, must change colors and go the other direction. If that happens, this is a strong bottom. What does that mean? That means that the sellers were in control. They were rocking it out. They were dropping it like it's hot, everything. And when they hit that area, there were so many sellers taking profits or so many buyers waiting to take over that the market reverses completely. And from a strong bottom, mid bands are more likely to break. From a strong bottom, Fibonacci areas have a higher chance of breaking with all that momentum. A strong bottom is the precursor for some of the highest probability trades you'll ever take. Well, if we learn strong, we have to know weak. The market reverses, but it's not from a termination condition. Price never reached a line. Guys, I want you to whittle that into a piece of wood, put it on your desk. Price reaches, no triggers, no trade. This is the precursor and mandatory for a strong bottom. If the market reverses from the middle of nowhere, no area reached, this is a weak top. This is a weak bottom. And why is that important? Because when you have a weak bottom, the midband tends to be more problematic. If the large triggers don't follow, there's your gap theory. And very often, my friends, they look for the next key Fibonacci area. Weak bottom, midband holds, go to the next area. When they reach the next area, strong bottom. All of the movement to a weak top. And guys, look at how the midband area is problematic. Do you see it? Why is it important to know the difference between a strong bottom and a weak top? Because what happens is you start making better decisions right at that midband area. Does that make sense, Mark B? Everybody in the room, we good? The trigger lines break above the fib. Mark, do you know the phrase? Price reaches, no triggers, no trade. Price reaches, no triggers, no trade. Man, this is not a termination condition, is it? 2 of the 4 triggers got through. That's a failed attempt to break. Not a strong top. Not a termination condition. Not a strong top. What's next? I love building these. Smalls cannot break the 1-to-1. Let me see where we're at right here. That's a termination condition. Triggers roll. That's a strong top. Does that make sense? One of the 2 small triggers peek their head, but the small triggers are 2 lines working together. If both lines don't get above, you can still have a strong top. And remember, this is remedial 101, the very basic approach to strong tops or bottoms. So everybody play along with me. Price reaches Fibonacci resistance, no triggers. Large triggers roll. Is that a strong top or is that a weak top? What do you guys think? Mark B, this is your lesson, brother. Price reaches, no triggers, no trade. It's strong. Triggers break. It's weak. No triggers. It's strong. No triggers. It's strong. No triggers. It's strong. 2 triggers. It's weak. No triggers. It's strong. And here we have a termination condition. It's just a termination. What would it take to turn that into a strong bottom, guys? What has to happen for it to be a strong bottom? It has to reverse. Perfect, Mark B. So, number 1, not even a top. Why? Look at your large triggers. Do they ever roll? They never do. It's not even a top. Nothing changes. It's just a blip on the radar. Has no bearing on anything. Your second one, strong or weak? And guys, this is what we'll do. You'll ask the question and I'll teach you how to answer your own questions. And go through the process. Price reaches. No triggers, no trade. It's mandatory for it to be a strong top or bottom. So number 2, even though the market reverses, what do you think? Strong or weak? And now here's the thing that's going to get you on this one, Mark. And I know that you're going, but there's a magenta line. This magenta line doesn't form until right here. Price doesn't reach it. Price creates it. So you're absolutely right. It's weak. Price reaches yellow 1-to-1s, but 3 of the 4 triggers break through. Mark, strong or weak? Weak. You got it. You're an expert. You are a pro. Direction is down. My system is only looking for short trades. It's just repetition. Mark, if you really want to be good at it, if you really want to be good at it, take this recipe, scroll back today, and take 25 pictures of strong tops and write it out. Price reaches, no triggers, it's a termination. The market rolls it strong. Type it out. It'll create a neural connection between your brain with what you see and what it means, and you'll never make that mistake. So right now, my system is looking for short trades. It's following the small triggers. But my system sees blocks, one-to-ones. It won't allow it to trade. It says, Mark, you cannot have a short trade because you told me not to trade into them. And some of you are saying, but Mark, I don't see any one-to-ones. But the system builds a time frame, and it does. And they weren't always there. So remember, just because you see it doesn't mean your system sees it. Your system will tell you exactly what it sees. If there is a higher time frame one-to-one and it's blue, that is a blue block. Block is synonymous with termination. Blue is support, no short trades into it. If the block is red, and I don't know if we've had any, there we go. Red is resistance. No long trades into that block. And guys, it's as simple as the triggers are down. There's nothing in the way. I accept an entry if it gives me one, but I asked it not to trade into divergence. That gets rejected. With a reversal bar, you'll see that the block is blue. Does that make sense, everybody? So what do? We wait. We wait for the rules to be met. 90% of the day is spent doing nothing. 10% of the day is actually trading. If I want to take a short trade despite the block, I'm going to allow any trade. I'm going to ignore filters. I'm going to hit the sell button. But my system absolutely positively refuses to put me in a trade because I told it not to. Does that make sense, everybody? So there will be times where you may override your system because of what you see on a large chart. There may be times where you disable your system because of what you see on a large chart. This room will make you a better discretionary trader. This room will teach you to read your indicators more effectively. This room will show you the reasons to maybe not take that next trade. Guys, these are what we call weak triggers. Weak triggers are not strong triggers. Weak triggers, anything could happen up or down. And when the market is showing you trouble and the triggers are weak, there we go, right back to the mid band. Mark B, strong bottom or weak bottom? Weak, which means this area could have been problematic. Now they don't seem to be because we're not in control. No gap. There was no gap. Guys, the buyer said that's far enough for us. Let's go up. And you know what's pretty cool is it all started from a block on the small chart that said no more shorts. And now my system is looking for long trades. Everything says up. All of my indicators are above these one-to-ones. Small triggers are crossed up. If the rules are met for a long trade, my system will enter. And with every trigger above these areas are more likely to create bounces up. I'm getting pretty excited about it. Might get a mid-band trade. It doesn't register the small triggers yet. It did. Now my triggers are down. And my system says don't go short, not into one-to-ones. So even though I'm trading with the direction of the triggers, these one-to-ones with every trigger above says more likely to bounce up. My system saw it too. It said, dude, Mark, what are you thinking? That's a look for more up, not a look for shorts. I know you told us to go with a trigger location, but you're pretty freaking smart. You've been in one-on-one for years, and you know that when price reaches and no triggers, that's a termination condition, more likely to create the bounce up. Don't even think about it. And now everything says up again. The next bar will give me down triggers. If I take a long trade, I'm taking a long trade. Whoop, there we go. Now the triggers are down. Now the momentum is strong. Pretty cool, right? Guys, this is day trading. Day trading isn't, man, I sure hope I make money today. Day trading is I sure hope my rules are met. I hope my patterns are true. I hope my edge is present so that I can take a trade that I'm able to prove typically wins more than it loses. I've got a block. No short trades because price reached yellow 1-to-1s. None of my triggers are broken. What the hell are you thinking, Mark? Don't worry about the momentum. This is an area more likely to create a bounce up. This is a weak top. Mid-band's more likely to hold. It did. And now it's pushing back up. Pretty cool, right? Everything that we talked about this morning is literally transpiring right in front of your eyes. One of the things that I encourage, no, Anthony, man, you want to know how loving NextGen is? Brother, I did the most thorough 101 for you this morning, and I'm recording it. And we're recording the chart reads today too. You will have the best reference material. Because guys, if you come to NextGen on a demo and you want to evaluate the software, I will do a hardcore, all the smart stuff 101 for you, and I'll record it so we have a more current version. Anthony, yours is being recorded today. Welcome to NextGen. Casey, if you're in here, that was for you too. My triggers are up. I don't have any resistance blocks. My system says, Mark, it's time to look for a long. And guys, there's your pattern. Weak top, mid-band area is problematic, and the market pushes up. Crazy. Now this divergence high is a line in the sand, absolutely. It's the exact spot where the sellers took over. Could be problematic. My system doesn't see it. I see it. My system does see 1-to-1s that just rejected the market. And because they did, it says, you know what? Might be just a little too soon for that long trade. Mark, what do you say we let price get above that thing that could create a bounce down? And how wonderful that that block coincides with this divergence high with only 2 triggers through it, keeping me from hoping longs work. $29,355 right here? Absolutely. Price reaches, no triggers, termination. Reversal, strong bottom. What does that mean? Well, broke this area pretty easy, right? But now we get to the divergence high. And now price reaches 1-to-1. All of my triggers are above it. I'm going to pause. Small triggers made it through the divergence high. It's not even a weak top yet because the triggers never rolled. So all that's happening right now is that I've got a termination condition in play. My trigger lines don't match. I can't really define momentum. The mid-band might hold, right? All the triggers above 1-to-1s, it's likely to create a bounce up. Taz right now is probably long, saying maybe, might be it, I don't know. We had a couple of those. You got it, Mark. Repetition creates recognition, my friends. Repetition, doing the same thing every day. And I think even more importantly, and this is, guys, this is from teaching people for years. If you get in the habit of annotating your charts, this is what I see and this is what it means to me. I see strong triggers. Because I see strong triggers, the odds are favorable for the market to continue up. You start leaning on advantages. I see price reaching yellow 1-to-1s. All the triggers are above it. There is no part of me that wants to go short into that termination condition. And you start to believe it. And there's your trade tracking sheet. I don't think I dropped that in the room today. It's got all these pictures, guys, and they're all annotated. Go through that. Use it as a study guide. A failed attempt to break out. Do you see it? 2 triggers through. So Mark, strong or weak? And I hope you're cool. I'm going to call on you all day. And guys, everybody, please play along. 2 of the 4 triggers made it through. The market reverses. Strong top or weak top? No triggers. Perfect, Mark. 100% perfect. Now the challenge is I've got some blocks here on large and small 1-to-1s that my system's not going to allow me to trade into. I'd have to override it if I wanted to take it. This is strong triggers, guys. It's got to get below those 1-to-1s. Those blocks will go away. There they go. I'm ready for a short if it'll provide it. I'm looking for it. I want it. I need it. Gotta have it. Triggers are down. No support blocks. So now I start playing the management game. If it gives me a short, there's some large chart stuff. If it gives me a short, there's nothing in the way on the small chart. They already failed. And guys, look where they failed. Right at the same spot they failed last time. But what do we notice here? They seem to be failing right where they failed last time. Uh-oh, we've got a fight. Weak bottom, mid-band area, large triggers still down. My system's looking for longs. Gap theory is in play? Hell no. Do you guys see it? Weak bottom, mid-band, large triggers below the reversal bar marker. This is your gap theory. Gap theory says they may suck back to those triggers. I don't want to get caught up in a long trade in that vacuum. So now they come back. There they go. They retest the divergence low. They close the gap to those triggers from that weak bottom. Mid-band is problematic. Gap theory is true. Can we say, as they make decisions, one of their decisions may be to continue down to these yellow 1-to-1s? Now my small triggers are rolling, my large triggers have rolled, everything's below, and I'll be damned. Patterns keep me out of the long and maybe even set me up for a pretty awesome short to close that gap. My system doesn't look for that trade. You better believe when I learn to read my charts, I will be. A lot of opportunity in these patterns, guys. Does that make sense to everybody, how that just transpired? Smalls above the large is not strong triggers, but my system is looking for shorts. It's still a weak top. It goes right to the mid-band. No, Mike, I don't. When they updated, they're just not visual. So if there are no fibs, I'm relying on 1-to-1s, right? They're there, just not in this particular range. Remember that your system, you had one right at the bounce? Awesome. How many days back are you? I am 10 days back. So my system goes back 10 days to create the fibs. If you are 2 through 9, right, we're not going to have the same fibs. Guys, I encourage you guys to trade your charts. If you're in a different time frame than me, your system has a different midnight. See, so you're 3. Yours is running completely different calculations than mine. So watch this. If I go to my data series, and Mike, let's see if we can get in line here, and I change my days back to 3. It's going to calculate real quick. Boom. Now I look like you. And what do I see? I see price pulling back to resistance to a mid-band from a weak bottom. All of my triggers are below. Textbook termination condition. Could you just sell the market and say, man, it's more likely to go down than up? And there it goes. Running stops in place. And if they run down to, well, my 1-to-1's gone. Pretty cool trade, right? I told you guys. Your chart reads will set you up for more. Did that make sense? Price reaches resistance. All the triggers are below. Instead of fighting strong triggers, I let them weaken. I look for a reversal bar right from the 1-to-1s. Get paid all the way down to the thing that could create the bounce. These are the trades that you are going to add. These are the trades that you are going to see. These are the shots you're going to fire. Because you're such an amazing chart reader, guys. I'm going to tell you right now, if you walk away from this room and you are not a better chart reader, one of us didn't do our job. Either I didn't talk about the patterns well enough or you didn't bother to ask questions. Now, I know what the answer is. Price reaches a divergence high, yellow 1-to-1s, none of the triggers break. Hell, the triggers haven't even broken resistance. Why would I ever look for a long trade into 1, 2, 3, 4 areas that could stop the market. Now the sellers tried and the buyers failed, and the sellers tried and failed, and the buyers tried and are currently failing. Could I make that box bigger? Can I say, holy smokes, thanks to rule number 2, thanks to trigger line understanding, I've defined an area of consolidation, but from that weak bottom, I'm not going long. And we'll see if they break out. Guys, give me a Y if you've ever gotten the ever-loving crap kicked out of you in times of consolidation. If you have made opinions both directions, lost a fortune, hell yeah, we all have. If you say you hadn't, you're lying. Don't be a liar, right? So guys, now, thanks to rule number 2, thanks to understanding strength, thanks to all these things, there's no reason to get caught in times of consolidation. You can force the market to break the areas creating problems. Until you invested in Pro, and Mark, stuff like that makes me happy. I absolutely love what I do. I really do. And I'm telling you, there's no doubt in my mind. I could teach a monkey to make a taco. You just got to give them the banana at the right spot. Guys, you're learning what the right spot for bananas is. I've got a block on resistance, which is great because I've also got a divergence high. Even though my triggers are up, my system says no thank you. Now, here, I had the perfect termination condition and room to trouble. I love that short trade. Here, my path isn't clear. Not yet. Only 2 triggers through, third's trying to break. I just got through support. Support may create a bounce up, but it's still a weak bottom. And guys, look at them dance. The buyers tried, they failed again. This is the fake out breakout. This is the sellers letting them think they're going to make it and then just telling them, ha, just kidding. We're going to shove your ass right back into the consolidation zone. Pretty cool, right? I'll show you how I used to trade. I watch people in prop chat talking about, I'm going to YOLO it. I'm going to do this. You might as well. You guys all remember this, right? You might as well just shake this bad boy and hope for the best. Price reaches a divergence low. Triggers haven't broken. My system's looking for shorts. If it gets one, I'm going to have to manage, right? I'm right at the bottom of that range. That defined range. So if I take a short trade, if I get my rules met, I know exactly the place that may stop the market. Now, I think the prudent trader doesn't try to show off in front of a crowd of strangers and say, oh, I'll catch this trade, and if it works, I'll look like a freaking genius. They say something like, oh, I'm right in the middle of a range where there's been 3 attempts long, and this is the 3rd attempt short, and they haven't been able to break, and look at the reaction, and to hell with shorts, to hell with longs. I'm going to go toast a waffle. So guys, I'm going to do that. I'm going to leave it disabled for just a minute. I'm going to let the market figure out. And that's it. Triggers went through, weak bottom. Triggers went through, weak top. But do you guys see how we're in the mess? And it's clearly defined, isn't it? Try and fail, 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 try and fail. Consolidation has been defined. Your range has been defined. The market has given you just ridiculously clear parameters of where it can't seem to break out. Does that make sense, everybody? And look at the reaction right off the top of the freaking box, right at the divergence high. I'm going to mute for 3 minutes. When I come back, maybe they will have gotten out, guys. So go stretch your legs. I'll see you in a few. What's up, beautiful? How are you? My metabolism is starting to crank. FP. I'll see you this evening. Yeah. Alejandro wanted to come out at 10:30. We just ask him to do 11. It has to be after 11 for sure. Okay. You're just gonna measure in unit. Yeah. Measure something. That's weird. Yeah, just tell him it has to be after 11. Sorry. No, because I can't crunch up people's ears. I love you too, baby. I guess sometimes it's just better to walk away, huh? And now here we are. They broke out of the range. Everything says up. I've got no blocks. We might get a trade. Pretty cool, right? How many losers could you have taken in that range? Probably more than the winners. So what do we see? Right now I've got weaker triggers, but that's okay. My small triggers are up. My system's looking for longs. Nothing in the way to create a block. Plenty of room to the next area. Guys, all I need is some entry rules met. And if it happens, guess what? I'm in. I'll manage. If it gave me a long trade, I already see pink 1-to-1s. I already see Fibonacci resistance. So now I wait, and I'm calm, and I'm patient. And I'm not worried about a thing. Any questions, guys? Everybody so far so good? Feeling good? Feeling like, oh my gosh, this may not be nearly as difficult as I thought it was? Here comes our push with weak triggers. All right, so let's play a game if you want. If price reaches yellow 1-to-1s, the mid-band area from a weak top, is this area more likely to be problematic or is it more likely to break? What do you guys think? If we do get a retracement, if all of my triggers stay up here, it's more likely to be problematic. So before it ever gets there, you guys already know that it could be a problem, right? And you've got that on your radar. And you're saying things like, all right, the triggers are weak and I see them trying to push down. And if they get here, I'm probably not inclined to take a short just yet. And what I'm going to look for is, where are my trigger lines? Is that gap theory going to be in play, right? What's it going to look like over here? Do areas line up? Guys, 8150 is a mid-band. It's 1-to-1s. It's a mid-band. It's 1-to-1s. There's even a high volume area line. Some of you may look for opportunity here to continue up. Some of you might get excited about the opportunity to go long from areas where every indicator on your chart is hanging above them. Now, it doesn't guarantee that the market will get there, but look at your small chart, your entry chart. The large triggers have rolled. The smalls are below the large, right? The immediate push is to the downside, but the big picture is to the upside. Does that make sense? If these guys say down, but these guys say up, there's no balance. You can let them agree. Wow, you can also mess stuff up and go all over the place. I hope that makes sense. Large chart said nothing but longs. Just didn't get rules met. because your system won't fight strong triggers. Anything can happen triggers, and it did too. So, Mark, I like that you're latching onto that language. If anything can happen, up or down, take 2 steps back. And what's the big picture? The big picture is everything says up. Does that make sense? So if anything could happen, what's more likely to happen? Probably up. Now, if anything can happen, and these are strong down, do you see how that creates an imbalance? Do you see how that says, you know what? These guys are pushing as hard as they can down. These guys are trying to push up without a lot of strength. My anything becomes a little bit blurry. And you're right. If price reaches Fibonacci resistance, if the triggers don't break, it could be an issue. But right now, what is it, Mark? It's not an issue. If I get in a long trade, if my rules are met, dude, that's a target. Yes, perfect. So this is where the market is likely to go if it continues up. And now we know it and we see it. And we are formulating plans before we ever get an entry, guys. And this is what sets apart the successful day traders from the people that rely on their emotions and their guts and their hopes and their fears, right? It's just logic. Everything says up, the market's more likely to go up. I can gauge momentum. I can see areas that are problematic. I can see when change is happening on a small chart. But you attribute the loss of momentum to the resistance? No, it hasn't gotten there yet. But do you want to see what happens? I make up stories, guys. True story. I make up stories. So this is what I see, Mark. Well, that's half of what I see. Buyers are in control, yes. No question about it. Buyers are in control, and they're starting to get close, maybe where they're going to take targets, or maybe even where the sellers are going to take over. Buyers are in control, and the sellers steal their momentum, and it doesn't last very long. They're testing the waters. What are they doing? They're saying, hey, are these guys going to fight hard if we try to go down? And they push up, let them go a little bit further, and the sellers test again. We want to check your resolve because we may want to unload right here. And they're going to see how the buyers react. And the closer they get, you'll start to see those divergences. You'll start to see those pivot stop outs. You'll start to see those second, third divergences in the same price range. And the sellers are literally going, I wonder how hard they're going to fight if they reach that key area. Can we take over? Or maybe the large crowd is saying, I'm going to take some profits. I know I'm getting close. I'm going to take some more profits. I know there's sellers waiting. And guys, you'll see these divergences start to stack up as you get closer to Fibonacci. Now there's the sellers pushing down. Takes 2.5 bars, Mark. Takes 2.5 bars. First, the market has to push down. Then it has to be confirmed. And then the next bar is where that divergence line comes from. That's why price doesn't reach divergence lines. Price creates divergence lines. Notice that your large triggers are still up. Notice that the area hasn't quite been reached. But what are we seeing? We're seeing the fight. We're seeing the sellers. The buyers are like, damn it, we want the fib. They fought back. And the sellers said, well, we drew a line in the sand. We'll let you get a couple ticks. These are areas, right? These are made from tens of thousands of calculations. And then you get a pivot stop out with weak triggers, with another divergence, and just shazam. Look at that. Pow. You can literally see the fights between the buyers and sellers as you're coming up on an area. Guys, this is a pivot stop out. That's a termination condition. The reaction was instant, and now it's a strong top. And my system's looking for shorts, and I support that decision. Because from a strong top, the mid-band's less likely to hold. With the large trigger so close, the mid-band's less likely to hold. Not guaranteed not to hold, but it's less likely. My momentum is gangbusters to the downside. If the mid-band doesn't hold, I can see the next key area. So what do I need? I need some rules, Matt. Give me a short trade. Triple dog dare you. Oh, but my higher time frame had some one-to-ones that I can't see on my chart. Because, sorry, for Mikey, I changed it to 3. Let's go back to 10. So at least my system and what I see are in line. If this is 3 and that's 10, and now I don't have a fib there. See how it changes when you change the days? So pick a day and stay with it, for sure. But my system is looking at 10 days. So I want to look and try and see what my system is looking for. And my system sees a lot of trouble right here that needs to break. And it looks like a weak top when I take off the 3-day fibs. And guys, this will Jedi mind trick you. If you're on different days than me, you're going to be like, oh, wait a minute. Something's wrong. It's not. It's just different calculations. So we'll see what happens. My system sees those yellow one-to-ones. It chooses not to trade into it. What's cool, guys, same lesson. Those divergences that we're printing, without anything there, you still see the fight. You still see the 3 divergences, and you see the sellers take over. Have you guys ever heard, like, in fighting, they call it telegraphing, where you can literally see what's coming before they do it, because people that can't fight change their weight, clench their fists tighter, and you're like, oh, here comes a punch. Guys, this is the market telegraphing that things are probably going to struggle to go up. All right, shorts are on the table. So guys, this is strong triggers. 3 triggers through. Smalls are down, large are down, synthetics are down. We'll see if it gives me entry rules, Matt. Or if that potential to break never transpires. Divergence, a loss of momentum, typically slows it a little bit because we're relying on momentum to break the area. That's my first loss. Keep eyes on that. Small triggers are rolling up, large triggers are rolling up. Area's not broken. You guys see it? They're trying, but they're not yet. And this is decisions being made right at a key area. This is buyers and sellers fighting right at a line that you know about. Let them push, let them break, get that shoved down. Get those 4 triggers below. It's okay. My system's looking for shorts. I'll trade that potential for it to break because I know that my system's going to give me a solid entry, a manageable entry. And sometimes you just got to take and manage. But is it interesting to anybody else how long it took them to get to the area and how long they've remained at the area? Straight shot, fight. 2 minutes. 1 minute from the top to the consolidation. We've been consolidating in the exact same spot for 5 minutes now. Now the sellers are in control. They're pushing. They're trying. But there's a fight. There's a divergence block. Price came down to the exact price where they failed last time. Hit it, rejected, block. And the area still hasn't broken. I want you guys to start thinking in terms of advantages. You're going to be listening on the handheld, so may not be able to answer even though you see me in the room. No worries. You and the wife have fun. That's awesome. Don't ever miss out on walking with your wife. Here we go. It never broke, did it? Divergence was the first sign that it may not, or at least that the fight wasn't over. And then it pulls up to one-to-ones, and it pulls up to a mid-band, and it's coming from a weak bottom, not a termination. The mid-band area is more likely to create a push down. My small chart is odds favorable momentum up. The one-to-ones never broke. Takes 4 triggers through an area to call it broken. And look at that. From a weak top, mid-band area is problematic, couldn't break through the areas. Small chart telegraphed it and said, just be calm for a second. Let us get out of this area where we can't seem to figure out what the heck we want to do. Does that make sense, everybody? There's 35 of you in the room. 2 of you actually talk. If you have questions, and that's it. When you say our way out, Anthony, show me a picture. And it has a lot to do. Here, do this for me. Right click on your chart and go to data series. How many days back is your chart set to? That can affect all of these things. What time zone are you in? One-to-ones are 100% Fibonacci alternates. They're fibs in the moment. So there's calculations that go in there. I can't see your chart or your settings, so I'm not really sure exactly what the correct answer is there. But those are things that can affect the difference between fibs, between one-to-ones. Tick data. Trying to climb out of the hole you dug. Don't even bother trying to come out. When you try to dig, I think what happens is you start to make stuff up. I broke rules twice this morning, Taz. 2 instant losers. Working on a new methodology with John Novak. All right, look at this. All my triggers are down below the one-to-ones. Price reaches the one-to-ones, and the one-to-one creates an instant bounce. We all break rules, right? 6 times? Well, you win today. You win today. Look at my large triggers are still down, but my small triggers are going up. All of my triggers are below one-to-ones, which means one-to-ones are a textbook termination condition. And it's pulling up into the mid-band area. Even gives a market flow signal right from the area most likely to create a bounce down. Some of you are in a short trade right now. Synthetics can create a bounce. One-to-ones can create a bounce, or divergence low could create a bounce. One-to-ones could create a bounce. You guys want to pretend it's a discussion? Does everybody see that price reached yellow one-to-ones? Absolutely no triggers broke. Every indicator was pointing down. And what did the market do? It bounced down. Now your small chart is starting to show divergences. Your small triggers are above your large triggers. You're above the synthetics. This is your decision-making point. Are the sellers going to crank it down, or are the buyers going to fight again? I don't know. What a great place to get paid. What an awesome place to get paid. Third divergence up may create a higher push. There it is. And if that higher push goes up, wouldn't be uncommon to see him take it back to the mid-band. And my system's got blocks on, so I'm safe. I don't have to form an opinion. And if I haven't taken a trade in a while, my opinions start to creep into my brain. 1, 2, 3 divergences, 4 divergences, right in that same price range. Blocks on the divergence, no short trades. It's grinding. Oh, well, Anthony, you're looking at a completely different So Anthony, you're asking me how come our one-to-ones are different, right? You're looking at minute bars, brother. So let me do a quick. One-to-ones are 100% Fibonacci alternates. And what they're made from, see if I can find an easy to do. Market goes up, market goes down. These one-to-ones are 100% Fibonacci alternates taken from the pivots. And they print right there. So the math is AB, and then when C is printed, potential D is the one-to-ones. You don't change it because it's perfect math. It's 100% Fibonacci alternates. It's everything that it's supposed to be. But if you're on minute bars, brother, your pivots are different. Your measurements are different. Your swings are different. It has nothing to do with prices. It has everything to do with the distance of the swings. Have you ever heard of Elliott wave? You know how Elliott wave has A, B, B, C, and then you project off into the distance based on those patterns? That's what one-to-ones are. They are 100% Fibonacci alternates. So when you're looking at them, and let me see if this was the one. And I believe it's extensions. And that's the wrong one. I went backwards. Hold on. I'm not used to the fib tools because if we're being completely honest, my software does it for me. So it comes up to here, and then it pulls down to here, and that's your 100% Fibonacci alternate. Do you see it, Anthony? Those one-to-ones are your 100% Fibonacci alternate. So they print real time, letting you know where the large crowd might make decisions. Now, if I am on a minute bar, I'm not going to have the same pivots, right? If I'm on a minute bar, hold on. I love these questions. And while I'm doing it, let me pull up this picture because don't try to make your new girlfriend kiss like your old girlfriend. They're apples and oranges because of the price bars. So if I come through here, not really even big pivots, right? So to create these one-to-ones, I got to back it up a little bit. I got to go back, and I'm looking at such a big time frame, Anthony, to create these one-to-ones, as opposed to being able to do it a little more in the now. So you will never, under any circumstances, get your minute bars and your Renko bars to line up. You might get 500 Renko bars inside of one 1 minute bar, depending on the volatility of the market. One is tick-based, the other is time-based. Does that make sense? Good question. I mean, it's a great question. And it's the same reason, so check this out. My small chart one-to-ones there's no large chart one-to-ones. Again, different time frame, different ticks. So TradingView won't be able to change it to ticks. I mean, I think you can, right? The question is, do you want to trade the proven methodology that we teach? Because if you do, it's been built around minute bars. But you can change your bars, line, step line, areas, columns, high, low, Renko, live break, range, point and figure, whatever the hell that is, high, low close. Like these are all of your options. There's your hollow candles. That's kind of cute. But the methodology, that's just the type. 1 tick, 10 ticks, 100 ticks. So yeah, you can make them. You can make them tick bars if you want. And it changed my one-to-ones instantly, didn't it? But that's not what we teach. That's not what I teach. So If you are going to modify your time frame, what I teach may not be applicable. Does that make sense? The whole methodology revolves around the minute bars. Now, could you take the same concepts, trading to areas? Absolutely. Could you take the same concepts, don't fight strong triggers? Absolutely. Using pivots for stops? Absolutely. But I've never in my life on TradingView traded a tick bar. So I don't know what the expectation would be. I do know that that's a strong top. I do know that the momentum is strong. I do know that the mid band is less likely to be problematic from a strong top. So I may choose to accept the short trade if it's given. Now the challenge here is that my large triggers are darn near a full bar away. Not uncommon to see it come back and close the gap, Exhibit A. And now this is where decisions are made. Are the sellers going to take back over, ride at an HVA line and synthetics that are pushing down? Are the buyers going to try to go to the next key area? I don't know. What I do know is getting caught in this little vacuum tends to be problematic. So I'll wait for them to make the decisions. Did all that make sense, Anthony? I thought you were coming to TradingView for the week. Or NinjaTrader. Price reaches the mid band. Gap theory sucks it back to the large triggers. This is where decisions are made. No worries. I can send Jason a message telling him that you're going to reach out to get set up on NinjaTrader. I mean, on the demo, you're more than welcome to, right? I teach both. And the cool thing is you've been around long enough, you've seen me teach on both. You know that both work. You just got to figure out which one works for you. I love this. Strong top, mid band, gap theory, sellers take back over, push down. My system's looking for a short. Man, just give it to me. Give it to me already. Strong top, gap theory, decisions, continuation. Mid band less likely to hold from a strong top. I love it. It's like you can predict. All right, let's get the trend system up and running. What do you say? So I teach trend trades every morning. This is the system based off of that logic. I'm going to let it load up and see what it does. Guys, give me a Y in the room if you see how strong tops make a difference. And even more so, hopefully I don't crash this, how weak tops, they did go and finish the move. I told John Novak today was going to be super heavy chart reading. If the system takes a trade, awesome. If we see a discretionary opportunity, awesome. But discretion comes from chart reads, guys. Discretion doesn't come from your desire to win. Discretion comes from looking at your chart and saying, this is a pattern where this result happens more often than it doesn't. When price reaches an area and triggers don't break, more often than not, the area holds. When an area holds and reverses the market, more often than not, the mid-band breaks. When the triggers are strong, the trend tends to continue. So you're taking all of these concepts and you're taking a very basic approach using an automated system looking for very conservative entries, the way I have it set up, and you're learning to become a better trader. You're learning to be a better discretionary trader. You're learning to become a better chart reader. That's the gift. We're going to let this load up. And now we're going to look for trend trades. Hopefully I didn't lock my system out by messing with things. I don't think I did. But it's going to take just a second to load up. Take care, Taz. Have a good one. Come on, system. You can do it. I may have. Close my Pro Matrix behind the scenes and see if that speeds up this process with less things working. Guys, does anybody have questions about the basic concepts? Questions about momentum? Questions about terminations? We're going to do the exact same thing with the system here. This system is really built around the idea that this is the perfect trade, even if you hit the X. That when the large chart leads the way and gives you what you need, go define an entry. And this is what the system's going to do, guys. It is hands off. It will handle entries and exits. It is not set and forget. We will still manage. We will use the large chart read, and we'll see what we can get done. And this is taking a minute. I'm going to give it just another minute. If it doesn't speed up, my NinjaTrader is still 100% functional, so it's just calculating. It'll take a second. I'm going to mute for a minute, guys. When this comes back, I'll be right back. Go stretch your legs real quick. Refill your water. I'll be back in 2. There it go. There it goes. All right, so let's see what we have going on. Same concept. Triggers are down. I didn't have any blocks. Now I do. My chart will build its own higher time frame. We're going to look at the higher time frame. Everything says down. I don't have any blocks. Entries on this system come from the painted zone. So if the market pulls back, well, we just hit a divergence low, which means absolutely no trades. No entry given, because areas can stop a market. Man, are they angry right now? Look at them go. Block is off. Everything says down. My system's going to look for a short. If it gets the short, I can see things that could create problems. Didn't get one there. I'm disabled. Weak triggers at 1-to-1s. Guys, look at how the market is moving. Look at your timestamp. Anthony, this is why you can't get the same fibs on minute bars. Through all that nonsense, it's this one bar. Through all that craziness, It's still in this one bar. That's why the two don't line up. But terminations are still a rule. Pretty cool. That was a good example of it. And it's funny, some people don't care for the speed of Renko. They prefer the minutes. Some people love the speed of Renko. And they get too distracted. I don't even know if it's better. It's just different, right? It's just different. It may be better for you. There's that little disclaimer, right? Not better, just has to be better for you. Get with Mark. Get it loaded up. I'd love to teach it. Hey, take care, Siska. You're very welcome. I hope you learned something today. When one bar doesn't break it down as much as Ninja, yeah. But even with Ninja, we're using trigger lines, not price. And when that termination reversed the market, it's a strong bottom. This area has a higher chance of breaking. Not guaranteed. I mean, it's still only 2 triggers through. But if you were going to take a chance and say, you know what, I'm going to go ahead and take that long trade because it's a strong bottom, because the triggers are strong, this is your spot. It's only 2 triggers through. It's divergence from a 1-to-1. Got some red flags, Fibonacci block. So you've got to fight some things if you choose to take the long. Me personally, divergence from 1-to-1s, only 2 triggers through 1-to-1s, Fibonacci block, that's not my long. You guys can have it if you want it. I'll sit on my hands. I'll wait for the next best trade. Because that's only the potential to break. And that's not a strong bottom because the small triggers got through. See, I had to double check, which means wouldn't be weird for it to not break. Wouldn't be odd for them to push back down. Because the small triggers got through, it is not a strong bottom. Now we'll see what happens. Can't go short into a fib. System won't let me. Can't go long against triggers that are down. System won't allow it. So I have to make a decision. Do I trust the settings that I put into the system? Do I believe in the idea that termination conditions can stop the market? The answer is yes. There's just nothing to do. I think most of us have tried to be smarter than the indicators. Doesn't always work out. Sometimes it does. Direction, momentum, and path. That's it. And eventually you get to the point where you see opportunity outside of the basic opportunity. It all comes from chart reading. It all comes from chart reading. When you know what you're up against, when you know what's working for you, when you know what's working against you, you can start to make good decisions, guys. From a weak bottom, mid-band's more likely to be problematic. All my triggers below 1-to-1s. 1-to-1s are most likely to be problematic. Fibonacci block. Fibonacci block. And once again, patterns repeat. So if you found yourself in a short trade, 29,325, that's where the market stopped last time. It's a pretty solid line in the sand if it gets there. Maybe not a bad place to take profits, but what do we notice over here? Divergence, divergence, one-to-ones. I've got a block on from the fib. I'm literally seeing the fight. Large triggers up, small triggers down, one-to-ones are a termination. Who's going to win? If patterns are any indication, the sellers are probably going to pick it up and try to take it to the fib. Not a guarantee though. I can see the trouble on my smaller chart. 3 divergences in the same price range, 4 divergences in the same price range. That's a small chart termination condition plus 1. Doesn't change the pattern, just keeps me patient. Price is starting to try to work to the other side of those large triggers. But once again, pivot, stop out. Stopping forward progress. %90 of your day, pretty much every day, spent reading indicators. 10% of your day actively trading. You guys have the option to let a good 5, 6, 7% of your day be asking questions to become a better day trader. An option rarely exercised in this room, which is really a shame. Been teaching live classes. NextGen's had them for 20 years. Some of the people in Traders Chat that get bothered by new users more than anyone else are trading the exact same concepts they learned 17, 18 years ago with NextGen, have made a career out of it, don't go to work, don't have to. Let it be easy. Price reached those one-to-ones. All the triggers were below. Does everybody have their surprised face on that the market pushed down? You shouldn't at this point. You shouldn't at this point be surprised at all that this is the reaction from that area with these triggers. Now my system's looking for shorts. I've got no blocks. My painted zone is up here. That's where the entry would have to come from. The market would have to pull back, get to this area, give me a zone extreme entry. And if so, I can see the areas that may be problematic. I've already got a management plan in play. Working through it in my head. No wishing, no hoping. Just good old-fashioned logic. $21.12, 9 minutes ago, we said this was the most probable reaction from this weak bottom. 9 minutes ago, we called this shot, guys. And there we go. The next line in the sand. How are they going to react? I don't know. I've got a block. My system won't let me trade into it. It says, Mark, when price reaches a divergence low and none of the triggers break, that area could stop the market, could create an untradeable bounce. And as such, you have requested that we don't trade into them. Wish granted. My system will force the market to break rather than my brain hoping the market breaks. Look at your small chart. Do you see the ticks going up and down right at the key area that could stop stuff? That's your fight. That's your decision making. It might last a minute. It might last 10 minutes. It might be over instantly. But we know without hesitation that's a spot. Bring it up a little bit. It's still a factor. My system sees it. Some of you may choose to take the trade anyway. You're like, yeah, I know it's a termination condition, but look at that strong top. I'm going to give it a try. I'll take and manage. That's your right. I won't tell you guys what to do. I'll help you recognize things that could be problematic. I'll even show you how to program them into your system so that it doesn't trade into them. That's on you, though. All right, so we've made it through 2.5 hours of me flapping my gums about chart reads. So guys, I am going to end